And in fact, most high-profile brokers now offer no-fee trading. Obviously good for investors, but is there a downside to it? After all, there are no free lunches. Joining us with his thoughts tonight, Noel Archard is the global head of so-called spider products at State Street Global Advisors. Good to see you. Thanks for joining us tonight.
Thank you very much.
We're calling it a downside, but if a company offers a free service or product, they're going to have to make it up somewhere else. What's the strategy here? What should investors know about where they're going to pay for it elsewhere?
Sure, I think that's the way to look at it. The needs of every investor is different, obviously, but when they have a brokerage account, they now have a lot of choices, which is great, to invest in either stocks or ETFs, even options for some clients at zero commissions. That puts a lot of choice on the plate. That's wonderful. An investor then has to see what's the full suite of services or fees that they're being charged within their account. They might have no commissions. That's great. And if they trade 4 times a year, that maybe means they save $20. If your brokerage fees go up for your account by $30 a year, then maybe that's not as good of a trade-off. So as with everything, it's the total cost of the experience that the investor needs to sit down and evaluate to understand, are they coming out ahead, neutral, or a little bit behind in any kind of these deals.
And some people have suggested that you need to take a look at the cost structure at your particular brokerage, because you may be charged, say, for advice, depending on how much money you have in your account, almost like a premium service versus a standard service.
Yeah, I think in all these situations, it really does come down to the individual investor and their experience. And so if you're being charged for advice, if that advice is helping you reach your end goals and it's done at a reasonable level, and now you're taking trading costs out of that equation, that's a real positive. That's something where the investor could end up ahead. There's talk in some of these accounts, what are you getting? What kind of interest are you making maybe on your cash levels in these brokerage accounts? Is it equivalent to what you might get outside of your brokerage experience? Well, if it's 0.5% less, but you're making up more than that in savings on your trading, then again, you probably have come out for the year, and that's a good outcome. We're just seeing a lot of scale coming to the market at this place, and a lot of our investors, the advisors, and the clients that they work with are getting the benefits of that economy of scale, but they have to do their homework.
Before we let you go, the answer may seem obvious, but I'm going to ask it anyway. Who do you think no-fee investing benefits the most? Who's the typical investor that makes it most attractive for?
Yeah, actually, I think this cuts across the spectrum. It's one of these interesting, shifts in the market environment. Whether you're an advisor, whether you're an end investor, to succeed in investing, you have to control what you can control, and costs are one of those things that you can control. We can't really do much about what the market does on a day in, day out basis. That's what the long-term planning and asset allocation focuses on.
Right.
But if you can control your costs, and if you can take a big cut of that cost out of the system, which is this frictional cost of trading,
right,
that really benefits everyone from the biggest institutions to the smallest investors.
All right. Noel Archard with State Street Global Advisors. Again, thanks for joining us tonight.
Thanks very much.